Welcome to our channel. Today we're diving into the world of finance to explore one of the most important market indicators in the world, the S&P 500. Have you ever wondered what the S&P 500 actually is, what companies are included, and why investors pay so much attention to it? Stick around as we break it down simply and clearly. The S&P 500, short for the Standard & Poor's 500, is a stock market index that tracks the performance of 500 of the largest publicly traded companies in the United States. It's widely regarded as a benchmark for the overall health of the stock market and is closely followed by investors, analysts, and economists around the world. The S&P 500 includes companies from a wide range of sectors: technology, healthcare, finance, consumer goods, energy, and more. Some of the most recognizable names in the index include Apple, Microsoft, Amazon, Nvidia, and Alphabet, Google's parent company. These companies are global leaders and play a major role in shaping market performance. Now here's a key question many investors ask. How much of the S&P 500 is invested in technology and artificial intelligence? Technology companies currently make up approximately 30 to 35% of the S&P 500 by market value. That means nearly one-third of the index is driven by the performance of tech companies. When it comes to artificial intelligence, the exposure depends on how it's defined. Companies with direct AI products and revenues, such as Nvidia, Microsoft, and Alphabet, account for around 8% of the index. When including companies heavily investing in or benefiting from AI, that influence can extend to 40% or more of the S&P 500. Another important detail is that the S&P 500 is market capitalization weighted. This means larger companies have a greater impact on the index's performance. As a result, major technology and AI-driven companies can significantly influence market movements, sometimes more than dozens of smaller companies combined. Understanding what makes up the S&P 500, especially its exposure to technology and AI, helps investors better assess risk, opportunity, and long-term market trends. That's why many investment funds, ETFs, and retirement portfolios are closely linked to this index. Thank you for joining us as we explored what makes up the S&P 500 and why it matters. If you'd like to discuss this further or explore how these insights may apply to your own investment strategy, please contact us at info@elysiumwealthadvisors.com. Until next time, happy investing.